All right, so no sooner am I talking about FDIC insurance, what it covers, what it doesn't cover, I get something very interesting in my inbox. Now, I've mentioned before, in 2008, early 2008, I believe it was around March, old J Snip 4, thinking he could trust the market and the commodities, and we've got regulators, and I can go do the American dream on my own. I can go look at charts and figure things out and make bets basically on the stock market, or in this case the COMEX commodities market, and win, lose, or draw. And I was winning for a little while until they slammed the price of silver down from like $20 to $17. No buyers in between. Instant killing off of all of our contracts, whoever had contracts at that time. Lost $3,400 or so, which was all that I'd put in around $2,800 or something to start with, maybe a little less than that actually, and had built it up to $3,400 in a matter of days. So I'm like, wow, I can do this. And then they pulled the old JP Morgan scam on me and nailed me, and anyone else who was in the market got crushed. So here's some interesting statements, because keep in mind, MF Global, remember that? Same kind of thing, brokerage firm. Gerald Celente had his contracts there he was playing. They went bankrupt. It was an allocated account. They told him, sorry about your luck, etc. So I just got something interesting here. The company that I used at the time, in 2008, I still get emails from them because I technically still have an account with them, even though there's no money in it. So I can log in every now and then, look at some charts or do things like that. But I constantly get little updates in email. So it says, and the company I used was called Options Express by Charles Schwab. New risk disclosure statement available. Please follow the link. Click. Let me close this. The risk of loss in trading commodities futures contracts can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should be aware of the following points. Now keep in mind, Gerald Celente had his money in an, forget even him for a second. MF Global, overall, all the people that was using MF Global had their money in an allocated account. And normally the rule of law is that those accounts come first in bankruptcy, meaning they get their money back first before any and all other debts are paid. And they tried to say, no, we're not doing that. JP Morgan's going to get their money first, and this creditor's going to get their money first. The rest of you guys, sue us. Have fun. And then a judge actually ruled on another case from a few years ago, and that what they just said was true. Yep, they're right. And then another judge said, no, we're overruling that because that's not true. An allocated account is an allocated account. You can't touch it. You can't commingle funds. Oh, really? Because according to this new risk disclosure statement from Options Express, oh yeah, they can. Ready? Following points. 1. You may sustain a total loss of the funds that you deposit with your broker to establish or maintain a position. All right, it just goes on to tell you there's risk there. Number 2, the funds you deposit with the futures commission merchant for trading futures positions are not protected by insurance in the event of bankruptcy or insolvency of that futures commission merchant, or in the event your funds are misappropriated. That's like telling somebody that robber over there just robbed the bank, made off with $1 million. We got him, we nailed him, and we got the money. We nailed him with the money. We found where he went to spend the money. Well, in that case, you have to get the money back because it's stolen property. What they're saying is, even if your funds are misappropriated, so even if they do something illegally wrong, you're not going to get your money back, even if they get it back. Potentially. That's what it's saying. Even if your funds are misappropriated, they're not protected by any kind of insurance. So, what they're saying in this particular point is, well, go have fun suing them to get it back. Number 3, the funds you deposit with a futures commission merchant for trading futures positions are not protected by the Securities Investor Protection Corporation even if the future commission merchant is registered with the Security and Exchange Commission as a broker or dealer. 4. The funds you deposit with a futures commission merchant are generally not guaranteed or insured by a derivatives clearing organization in the event of bankruptcy or insolvency of the future commission merchant, or if the future commission merchant is otherwise unable to refund your funds. Certain derivatives clearing organizations, however, may have programs that provide limited insurance to customers. You should inquire of your futures commission merchant whether your funds will be insured by a derivatives clearing organization, and you should understand the benefits and limitations of such insurance programs. Number 5. The funds you deposit with a futures commission merchant are not held by the future commission's merchant in a separate or allocated account for your individual benefit. Futures commission merchants commingle the funds received from customers in one or more accounts, and you may be exposed to losses incurred by other customers if the futures commission merchant does not have sufficient capital to cover such other customers' trading losses. Number 6. The funds you deposit with a futures commission merchant may be invested by that futures commission merchant in certain types of financial instruments that have been approved by the commission for the purpose of such investments. Permitted investments are listed in Commission Regulation 1.25 and include U.S. government securities, municipal securities, money market mutual funds, and, quote, certain corporate notes and bonds. The Futures Commission merchant may retain the interest and other earnings realized from its investments by commingling your customer funds. You should be familiar with the types of financial instruments that a Futures Commission merchant may invest customer funds in. They are just now saying, we are absolutely commingling your funds in our own pool of funds so that we can bet on things we want to bet on, and if we win and get commissions and get interest on those bets, we keep all of it. You, on the other hand, get none of it, and if we lose on these bets, taking your money and pulling it together, if we lose on these bets, you get nothing. I could not believe what I just got in an email from Options Express by Charles Schwab. Oh, that's a big, everybody knows Charles Schwab. It's a big name, man. Come on. I don't need to read this disclosure. It's fine. Oh, really? Did you just hear what I said? The Futures Commission merchant may retain the interest and other earnings realized from its investment of customer funds. Number 7, Futures Commission merchants are permitted to deposit customer funds with affiliated entities, such as affiliated banks, securities brokers or dealers, or foreign brokers. You should inquire as to whether your Future Commission merchant deposits funds with affiliates and assess whether such deposits by the Future Commission merchant with its affiliates increase the risks of your funds. Oh, there's no question. This is set up for the raping and pillaging of your funds, by the way. Clearly. Number 8, you should consult your Futures Commission merchant concerning the nature of the protections available to safeguard funds or property deposited for your account. Why? You've just stated that there's no security, there is no insurance, there's nothing. I'm inquiring to see if I'm protected. No, you're not. Let me call Options Express by Charles Schwab. Yeah. No. Oh, let me call MF Glove. Oh, they're bankrupt. They already went bankrupt because they didn't either. Oh, there's nobody. Number 9. Under certain market conditions, you may find it difficult or impossible to liquidate a position. Go back to 2008, March, JSNIP 4, $20 silver. I had my stops in at maybe 10 or 20 cents less. It went down to $17. All my stops were triggered. Not all of them. I only had one stop. My stops were triggered. But there are no buyers. No buyers in the market. And it happened in a blink of an eye. And then at $17, all of a sudden there were buyers. So then at $17, my account gets liquidated. Not at $19.80. No, $17, which wiped out the entire account because it's on margin. It's 10 times the value of what's in, what I'm playing with. So got wiped out. Under certain market conditions, you may find it difficult or impossible to liquidate a position. This can occur, for example, when the market reaches a daily price fluctuation limit, or what is known as a limit move. Number 10, all futures positions involve risk, and a spread position may not be less risky than an outright long or short position. Number 11, the high degree of leverage or gearing that is often obtainable in futures trading because of the small margin requirements can work against you as well as for you. Leveraging or gearing can lead to large losses as well as gains. Number 12, in addition to the risk noted in the paragraphs enumerated above, you should be familiar with the futures commission merchant you select to entrust your funds for trading futures positions. The Commodity Futures Trading Commission, or CFTC, requires each futures commission merchant to make publicly available on its website firm specific disclosures and financial information to assist you with your assessment and selection of a futures commission merchant. Information regarding this blah 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 found on the site. All of the points noted above apply to all futures trading, whether foreign or domestic. In addition, if you are contemplating trading foreign futures or options contracts, you should be aware of the following additional risks. The bottom line is, I just read you what you needed to hear. And those, what was it, paragraph 5, 6, and 7? I'm going to read those. I got to read them one more time, just to finish this. The funds you deposit with a futures commission merchant are not held by the futures commission merchant in a separate account for your individual benefit. Futures commission merchants commingle the funds received from customers in one or more accounts, and you may be exposed to losses incurred by other customers if the futures commission merchant does not have sufficient capital to cover such other customers' trading losses. Let me give you an example of that one. You, me, this guy, that guy, little small firm, whatever, we're playing the futures game. We're using MF Global. They're our brokerage, our clearer. And they've got a big customer. In other words, some customer they got's got a lot of money. But keeping in mind, futures are leveraged 10 to 1. If that big customer's got $1 billion in open contracts and the market turns sour fast, because it's leveraged, whatever that amount moves up or down is multiplied by 10 times. So if they got $1 billion in open contracts, they're playing with $10 billion on paper and on their screen of their computer. They're moving $10 billion worth of stuff. That's what they're betting on. They've got $10 billion worth of contracts, even though they only had to put $1 billion into their account because it's leveraged 10 times. So that means that one company that's got $1 billion playing this game, and there could be hundreds and thousands and thousands and thousands of little guys like us who are playing $3,000, $4,000, $5,000 here, $5,000, $10,000, $15,000 there. All added up, don't even come close to the $1 billion guy over here, who again is leveraged 10 to 1, so he's really playing with $10 billion. And he makes a bad move. And now he's wiped out, and he files for bankruptcy. That company, the one that you're using in this case, we're calling it MF Global, contacts them, sir, you've got a margin call. You owe us $4 billion to make your account liquid again, just to settle it. Not even liquid, just to settle the account. You owe us $4 billion, and you get nothing because the market went down so bad, and you were leveraged, of course, 10 to 1. Oh, we are? Well, guess what? We just filed bankruptcy today. Sorry about your luck. You're not getting any billions. Okay, bye. The fact that they don't have that money all of their customers, which would be me, you, the other guy, remember those examples? Thousands of us, don't have their money either. Because that company, that, what are they calling these? Futures commission merchant, in this case would be the MF Global, is using another entity to do its bidding. So even though you've given MF Global, he gave them $1 billion to play with, and we've given them thousands to play with, they're on the hook to another company, just like we were on the hook to MF Global. So now MF Global says we owe this company a lot of money, and this guy needs to give us $4 billion we don't have. So what we do have is all of this combined, here you go. And they wipe out all of your accounts because that one big trader. All of us lost because of it, okay? That's how that works. Number 6. The funds you deposit with a futures commission merchant may be invested by futures commission merchant in certain types of financial instruments that have been approved by the commission for the purpose of such investments. Permitted investments are listed in Commission Regulation 1.25 and include U.S. government securities, municipal securities, money market mutual funds, and certain, I love that one, and certain corporate notes and bonds. Oh, which ones? Can you be a little more specific? Which company? Which bonds? Exactly. One that's going to go belly up. The futures commission merchant may retain the interest and other earnings realized from its investment of commingling your funds. You don't get any. We get to keep it. You think I'm putting my money in this account, it's my money to play with these futures contracts, and the commission merchant person, in this case MF Global, doesn't see it that way. They're saying, oh, we get all this money to go gamble with. And they're gambling with it and hoping to win. And if they don't win, you lose. Heads, they win because, right, heads they win, tails you lose. Heads they win because they're earning interest and making these bets with all this pooled money from your allocated account that they're saying here is not allocated. This is pooled money. And they keep all the bounty. Billions, whatever they're making, they get it all. And all you get to do, all you're doing is putting your money somewhere so you can play a game. It's like, hey, if you want to play this game over here, this awesome virtual reality type game, give us this money. We won't even touch it. It's just going to sit here in my hand, right here. You can actually look over and see it. And then you get to play the game. And then when you're done, I'll give you your money back. Really what's happening is you're playing that game, and because the only way you can play that game is by letting me hold this money, I'm gambling it. I'm on the blackjack table. 21, 21. Come on, baby. Come on. Come on, he ain't looking. Hurry. Next. Okay, yeah, here's your money back. I tripled his money, and I get to keep it. He only gets his money back. See ya, sucker. Oh, another guy. Do it again. Bam. 21. Come on, baby. Come on. 20. Oh, shoot, I lost. Come on, again. Oh, no, I lost again. Oh, my God, all his money's gone. Okay, I'm done playing the game. Can I have my money back? What money? What money? Something happened. Bankrupt. Go talk to my lawyers. Get lost. That's how this is being treated right now. Number 7. Futures commission merchants are permitted to deposit customer funds with affiliated entities. They are permitted to take your money, deposit it with another third party, without your knowing, without your any feedback from you whatsoever. You gave us your money so you can play a futures contract. We have the reserve the right to take that money and then put it in some other affiliated account, such as affiliated banks, security brokers or dealers, or foreign brokers. And can you imagine if they put it in a foreign brokerage? It may not be protected by the rules and regulations and things we follow here. Now it's an international matter. You're done. And strangely enough, isn't that what MF Global was doing? They were betting on foreign investments and whatnot. Incredible. That's all I got for you. This is unbelievable. Take care.